Hi everybody, this is Thomas Wood with Microquant. We're going to be looking at a few different scalping trades we placed this morning using value range trading and the Australian dollar New Zealand dollar pair. We had 3 of them right here in a row that we already have closed out, and we have a 4th that is currently open. The first trade we had a profit of 7.5 pips, the second a profit of 9 pips, and the third a profit of 6.7 pips. Now, the reason that we can use value charts in order to do this value range trading is we have the ability to see objective market valuation. The way that you normally will go about trading a value range is you will be selling short at overvalued and covering as soon as you reach undervalued, or vice versa, buying at undervalued price points and covering at overvalued. It's just one of the great ways that you can use objective market valuation to time entry and exit points across many different markets. Now, this first trade we're looking at, we're on a 5-minute chart of the Australian dollar New Zealand dollar pair. Our first trade we entered at this moderately overvalued price point as indicated by this yellow upper bar segment and this red arrow, and then we covered down at this bar. We did miss the moderately undervalued price point as signified by these lower yellow bar segments by just a couple bars. However, we still exited at a very profitable trade. The reason we went about entering this trade, we had a couple different signals. On our MQ cycle finder, we had a lower low pattern forming. On our MQ migration index, we also had a lower low pattern forming. And then our MQ momentum, we could see that the downside momentum had been steadily increasing without barely any upside momentum interrupting it at all. Now, the second trade we placed, we shorted on this bar segment right here. You can see this wasn't actually moderately overvalued when we entered the trade. However, it was at the same level or price that the moderately overvalued bar segment was at a couple bars before. We entered there, and then we covered at the moderately undervalued price bar as signified by this blue arrow. Now, the reason that we entered this trade, again, we had a lower high pattern forming on our MQ cycle finder. We also had a lower high pattern forming on our MQ momentum. Now, you can see we did not have a lower high pattern forming on the MQ migration. This can be an indication that we're exposing ourselves to a little bit more risk. However, you can see we had this trend line that had been coming down, and every time this market had bumped against this trend line over the past few hours, we had pulled back against it. So it was just an extra barrier saying there's some resistance to the upside here. Now, the last trade we have, we placed at this moderately overvalued price point as indicated by this upper yellow bar segment, and then covered at this moderately undervalued price point as indicated by this lower yellow bar segment and this lower blue arrow. Now, the reason we had this trade, we can see we had again lower highs forming on our MQ cycle finder. We also had lower highs forming on our MQ migration, as well as lower lows forming on the MQ migration index as well. Now, the last thing we see is on our MQ momentum, we had a lower low pattern forming on the downside. So we had an increase in downside momentum with barely any upside momentum, again, because we had a lower high pattern forming here. This is just one of the great ways that you can use value charts to trade the markets intraday or end of day. It works both ways, but doing value range trading is just a very profitable way that you can time entry and exit points for these markets. We'll continue to follow the New Zealand dollar Australian dollar pair in the future to see how these trades continue to turn out. Until then, happy trading.